As always, we begin this video right where we left off in the previous, and if you're having a hard time following or you, you start in the middle here of the series, you can just do a search for Beginner Day Trading Introduction and do a filter by date. You should end up being able to find this and just go to videos and maybe sort from oldest to newest and just follow along. In the previous video, I had started talking about some chart trends that I have personally experienced, and I continue that idea with this video where we are going to talk about filling the gap and what is the gap. I realize I haven't gone really much into how to trade, but I'm thinking that before we can learn to trade well, we should learn some basics. So, for example, I'm going to cover this gap and fill in the gap, but I haven't told you, well, so why do we care? What do we do with that information? But just bear with me. Right now, just like we want to recognize support lines, trend lines, and resistance trend lines, gaps, and filling the gap, then later we can use that knowledge to how to trade. Here we have a chart that I've seen many times where the stock is coming along and all of a sudden it just spikes almost. I don't know, a news item, who knows, something, some event, some news, and it spikes. And then I've seen different things happen after that. Even as newbie traders, though, you could ask yourself the question, well, what happens to, obviously there's a lot of interest here in buying the stock. We'd have to look at the volume as well, which means the buyers are paying what the sellers are asking, and the sellers just keep, the asking price just keeps going up, and the bid price is also going up. What happens, do you think, if it goes up too fast? A couple of things. A, traders, people who hold a position could get scared, or maybe they're not scared, but they want to take profit. Now, here is one possibility of what could happen. It hits a certain point where people start rethinking their position and what they want to do, and then it just starts coming back down as people take profit, and then there's probably some panic selling. Oh, wait a minute, it's going down, or so, and so on and so on. And then it could be the pump and dumpers want to get back in, or cooler heads prevail, or people start again rethinking their position. But what I wanted to talk about is this part right here. I want to call this section here filling the gap. So then if that's filling the gap, and we'll talk about what that means, what is the gap? Then I'm calling this the gap. And we've already talked a little bit about this section, which was profit taking and panic selling. Notice the difference in time period between the gap and this longer time period where I call filling the gap. This period is longer, has gone through evaluation of traders, sellers and buyers' minds, and has methodically increased in price with some rethinking and selling and so forth. So there's some evaluation here in the market. This short time period didn't have that. So the gap is this thing which just spikes up, and it's too fast, too soon. So we already know this is the panic thing. And then after some time, where people reevaluate their position, they fill the gap. In other words, the gap blew right through all these levels in price. So it has to, not necessarily it has to, but I'm just saying this is a trend that I've seen in graphs. After it lowers, it doesn't go lower in support than previously. So it's a little bit higher typically. And then people start filling in all of in a gradual way all of those price points that the gap skipped. So this is why it's called filling the gap. All right, so we are going to stop this video right here. I like the fact that it's kind of short. Don't like to do long videos if I can help it, and it's a good place to stop. See you in the next video.